Okay, so today we'll be doing a little back testing. All right. Sorry about the noise in the background, people. I forgot to turn off my iPhone. Moving on. All right. So the first order of business that we have to understand that the foreign exchange market, the forex market, likes the trend. In order for us to try to take a trade, you have to understand what trend the market is currently in. Now, as you can see here, the market is actually pushing up. So the market broke, burst out in an impulse move, pushing up, pulling back, pushing up, pulling back, pushing up, pulling back, continuously pushing up, and it made this huge pullback. Which at this point in time, what we would have to make an assumption to say is that the market was trying to go down, but it could not do that because at this point, this was the lowest point in the market at this time when it was trying to make a deep pullback. Right, this was the lowest point in the market at the time. As the market didn't take out this lower point, what it went ahead and did was to stop right here and formed a higher low. Price pushed up, encountered resistance, pushed down back, and leveled at this newly created higher low, which is more recent than this one. So this is now the lowest point in the market, where from this point on, as you can see, the resistance point became a thing of the past. Price actually broke above the resistance, came down, formed support, and continuously pushed up. Now, what we want to do is analyze the market at this point in time, right? And this is what, let me move this thing right here out of the way. This is sometime in March, and this is current price area is at March 10th, and it's 5 a.m. and it's now currently at 1. What we're trying to do right now is to zoom in. So we're going to scale down to the lower time frame to try to see if we can get an entry. The mere fact that the market is actually trending up on a continuous basis, right? And hasn't come down to any form of these low points, or rather higher lows. There. Safe to say that what we should try to do right now is to take buys. Now, as you can see right now, what we did, we identified the area that price is trading, ranging between, it's kind of a bit of a consolidation, even though the moves are big. But what we did, we identified the area that price was actually trending in, or rather ranging in. So this is the low point of the market. This is the high point of the market. What I went ahead and did was to draw this little area here, which signifies a zone, right? Because this is the most recent high point. This was the previous high point, and this is now the newly created high point, which makes it a lower high. Cool. Now I drew this area using what is known as the rectangular tool right here. So what we're going to do now, without any further ado, is scale down to lower time frames. So we're going to start off by looking on the 1 hour. So right now, as our bias is actually biased based on the fact that the market is trending up, what we're going to do right now is to watch price, right? Because anything can happen. It can either break through here, continuously go up, or it could break here and push down, plummet through the toilet, really. So what we're going to do is play. Y'all saw that? This is an engulfing candle here, indicating that this newly created higher low is now cemented. And this is basically a kind of double bottom. So more than likely what's going to happen is that this here is going to get broken based on the strength of this double bottom pattern right here. And the fact that price is actually pushing up as well. It also broke this little minor zone right here. Yeah. Y'all saw that? This was just pure impulse. As we're seeing that, and it looks like this candle wants to close like this. Let's see if we could go down to a lower time frame, like say the 15, the 30, and the 15, right? I guess you could call this the little tree soldier pattern where 3 bullish candles going up, right? And as we can see, it looks like price basically broke the zone. So what we're looking for right now is to see if there's any buy opportunity. It's now 21:45, right? And this is roughly 15 minutes to 10, I believe. Yeah. Okay. Ooh, this look good. Should we actually take a trade right here? This could be a retest. It's forming lower wicks. Should we? I'm thinking no. What do you think, guys? Leave a comment in the comment section below, yeah? Let's see what happens. I think that we shouldn't, based on the fact that its price didn't push back into the zone actually. So let's look what happens next. Let's look what happens next. Y'all saw that? If we had actually taken a trade right here, based on the fact that this was like two bullish candle going up, trying to take this candle out, we'd actually lost. We would have actually lost this trade unless we actually placed our stop loss below the zone. But it's always recommended that we place our stop loss below the zone, right? Okay, so we're now at the zone. Let's see what happens. This candle looks actually pretty good. Price actually broke this area. It's a bit risky, but what we're gonna do right now is to take a trade actually, because this high point was actually taken out. Let's see if we can take a trade. So we're gonna go long on this one. So that's roughly 14 pips, right? It's a bit late in the trade, and what they would say is that if you're late in the trade, what you should do is actually sit back and miss it at this point, because we don't want you to develop what is known as FOMO, and that's basically the fear of missing out. But based on this candle and this candle, it looks like we could actually do good to catch a few pips. You know, you can scalp it out. The momentum looks strong actually. So what we're gonna aim for is our 1 to 3. And there we go. 1 to 3. God damn it. Hold on, peeps. Yeah, we'll work with this. 1 to 3. Let's see if we actually hit it. You know what? Based on the fact that we got such a late start on this trade, what we'd actually do is we try to push it a bit. Let's say 50 pips to make up for the time. Let's say 54. Yeah, thereabout. To make up for the time. So what we're looking for is like a 3 and some extras, right? So right now in the trade, we would have entered here, breaking this high point, and it looks like there's momentum. So there's a good chance if we entered here, more than likely we'll be okay. It's now 11:45. So let's see what happens. If it's going to hit or miss, hit our stop loss or hit our take profit. Okay. Nice. So you see that, guys? We entered here, and it's a bit of a risky trade, but what we went ahead and did was entered anyway, based on the fact that the momentum looks strong, and that's fine. So what we can do now, because we'd have actually caught at least 10 pips right now, could have just taken that 10 pips in a scalp and came up, based on the fact that we entered this trade, right? It's not advised that we stay in, but let's see what can happen, right? Nice. Y'all saw that? If we had actually left this trade, we would have been good with our 10 pips. Price did retest a bit, but it looks like it's actually going back up. So let's see what happens. Also, if we had entered from like down here, and caught most of this, what we could have done is actually roll their stop loss, bring it into break even. And this is how we'd actually do that right now. We literally bring it up like this, right? So this means that any drawdown that we would have, right? We entered a bit late, so we'd actually take it all the way up here at this point, but we're not going to do that. So what we're going to do right now is let it roll, okay? So price is pushing, it's pushing, it's pushing, and it's going so goddamn great. We'd have caught so many pips. And we're just going to let it go to our TP, We entered the trade a bit late. We actually traded actually took the trade outside of our trading hour, but it looks like it's going good, and we should be fine. Oh my, this is quite a retracement. At this point, what we'd have probably done is to actually exit, right? What we're actually going to do, we're going to be risk takers and risk it for the biscuit, right? Because we have quite a few consequences, such as this trend line right here. Price kept going up and up and up and up, right? I'm going to change the color to green because that's the basic color of candles, green and red. So this is a bullish trend line. Anyways, moving on, guys. So price is retracing a bit, but we're still in it, right? Let's see what happens. Damn, we would have gotten stopped out because what we went ahead and did was because of FOMO, a new trader would have actually stayed in this trade, and because of greed. So we would have actually lost this trade based on the fact that we entered roughly about here. And this would have been about 20 pips, but we did not take it. We tried to be greedy. We tried to ride the storm out based on the fact that there was a little momentum. And now look at what's happening. Price is actually retesting, right? So what do? We basically lost this trade, right? So we got stopped out. Well, now that I think about it, we actually haven't gotten stopped out. We're just in a deep, 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 deep drawdown. So let's see if our stop loss is going to hold. Because if you think about it, we're actually not in. We've actually not lost this trade as yet. It's just in deep drawdown until it hits the until it closes below the zone and actually hit this little final piece of the red line right here. We're still in the trade. Let's see what happens. Damn, that was close. But we're still in drawdown, guys. This is the area that we need to break back above to go back into profit. And then we could probably close out. Or we could still risk it for the biscuit and go for the whole mile. Right? Damn. That was close. I was scared for a minute. But we're continuously pushing up. And what could happen at this point was, based on the fact that price broke this ascending trend line, it could have actually bounced, closed, and continuously plummet. But it didn't, and we're still glad. But if we look at the moral of the story, this actually teaches us that we should not actually trade outside of London session. And if we do, let's not be greedy and take the profit. Yeah, in and out for a quick 10 to 20 pips. Because from here to here, this is roughly 10 to 20 pips. Let's find out. So from here to here, it was literally actually 30 pips. Damn, that's good. So could have gotten 30 pips and came out on a bad entry. Yeah. So based on the fact that price then closed back above this ascending trend line, we could stay in and see what's up. This is actually a good thing. At this point, what I was afraid of a few seconds ago was that price would have actually formed a lower high and pushed down, break below the zone and continuously go down. But the fact that it actually broke here and created an engulfing pattern here, it's safe to say that this is going to ride out and go up. So what we're going to do at this point is risk it a bit and take another entry. And based on the fact that all of this wick is here, we're going to place our stop loss a bit, just a bit below the wicks. And we're going to aim for about a 1 to 3. At this point, based on the fact that price is above this, we would have actually been in some profit and would actually be entering the same spot again. And let's aim for 1 to 3 over here. So our 1 to 3 would run us 56 pip, right? So this is actually a bad entry, but we're now back in profits, maybe minor profits, but let's see what happens, guys. So it's now currently, let me just move this icon right here. It's now currently 8:15 a.m. and we're gonna risk it for the biscuit, right? So let's go. So price is now back at this area that pushed price down, creating a double top which is kind of a bad thing because price could now push down, continuously push down back into the zone and continuously plummet. So let's see what happens. Outside that, in the zone, an engulfing candle was formed. Price could go down, but we're still risking it because that's what we have to do. Risk, right? In order to be a profitable trader, you have to learn to manage risk and also be confident in your trading strategy, right? So price continuously goes down, but it looks like a candle is forming here at this point. So what we're gonna do right now, because we would have entered here anyways, but based on the fact that price is now seemingly trying to find a new area where wicks are forming, we might want to change our risk to reward ratio. Now that we've actually narrowed it down, that we're gonna move stop loss a bit and make it a bit tighter to that right there. And boom, or 1 to 3, 27 pips on this one. And it would have been 27 here, so it would have actually equaled out to 55 pips, which would have been the original anyway. So let's see what happens. Oh my. Y'all saw that? We actually did not get stopped out. This was pure genius. We did not get stopped out, guys. All right? We're still in this trade and we're still going. And this engulfing candle says a lot. Nice. So now where we broke above this resistance point, it turned support and continuously going up. And boom, this trade, this TP actually got hit. And that would have been a perfect 27 pip. And this one would have gone hit previously. Heights of 27 and 27 actually equals to 27 plus 27 equals to 54 pip actually. Pure genius, guys. So this one is a bit risky based on the fact that we entered at a time outside of our trading hours, which is at 11:45. Well, actually, it was 12. And then price retraced almost off the salt. We were in major drawdown, but even then, we still wouldn't be afraid based on the fact that we know how to manage risk. That is what we do. You have to learn how to manage risk wisely and make the most of the market. So we could have stopped here and got this 30 pips from here to here, 30 pips, and left the market, right? But what we went ahead and did was to actually stayed in the trade, right? And we gathered this. Let's see how much this was actually running for. So nice. This is actually 44 pip. My correction. 44 plus 27 equals, I'm not math genius, guys. Let me just run a quick calculation right here on my phone. 71 pips. Nice. And that would be quite a day. We would have gathered 71 pips and 2 trades would have been taken. All went smoothly. First one is a bit risky. We were in major drawdown, but it actually played out. Caught us 44 pips, and this one caught us 27. And we would have gotten a total of 71 pips. Yeah,